Now, JLR just cut 500 jobs despite investing £3.8 billion in EV development. Now, the headlines are calling it a crisis, but here's what they're missing. This isn't about EV technology failing, it's about strategic execution. Because that £7.6 million per job they've just eliminated reveals something crucial about how traditional manufacturers approach electrification versus how Tesla built their empire. Now look, I've analysed exactly why Tesla never faced these brutal decisions. The three strategic differences between their approaches explain why one company creates jobs while the other one is actually cutting them. And if you're considering any luxury EV purchase, this analysis changes everything. But first, let's look at what actually happened yesterday that the media completely missed. Hey guys, my name's Des from the Electric Oracle, and yesterday JLR announced they're axing 500 management jobs through voluntary redundancy. Corporate speak for we're in trouble. Now, before the anti-EV brigade jumps in, let me be crystal clear. This isn't about EVs failing. This is about a company that somehow managed to burn through £3.8 billion and still ended up cutting jobs. And look, I genuinely feel for those 500 workers. These are real people with mortgages, families and careers built around the British automotive heritage. They deserve better than being casualties of strategic miscalculation. But here's what's really happening and why Tesla's approach to electrification is so fundamentally different that they've never had to make these kind of cuts. The contrast is absolutely staggering. So let's start with the obvious question. How do you spend £3.8 billion on EV development and then still end up cutting jobs? Here's how JLR allocated that massive investment. You see, they spent £2.5 billion in R&D for the EMA platform, £500 million in factory upgrades at Halewood, £100 million in supply chain optimization, and £20 million annually in workforce training, plus partnerships and battery technology deals. Now, that sounds impressive on paper, but look, here's the reality check. JLR's retail sales dropped 15.1% in Q1 2025. Their wholesale volumes were down 10.7%, and despite all that investment, they're losing market share. Now look, the US tariffs hit them hard. 25% initially on imports forced them to pause shipments back in April. But you know what, here's what's really telling. JLR's total revenue is about £29 billion annually. That £3.8 billion investment represents about 13.1% of their revenue, a massive strain on cash flow. Now Tesla meanwhile spent about $10 billion on Capex in 2024, but their revenue was $96 billion. That's about 10.4% of revenue, and they didn't cut jobs, they actually created them. But look, here's the thing. JLR's £3.8 billion investment was supposed to be for future-proofing the company, but instead they're cutting the very people who should be implementing that future. Now, this isn't just about money, it's about strategy, and the strategic differences between JLR and Tesla, in my view, they explain everything. Now look, before I dive into Tesla's approach, I know some of you will say, Des is just a Tesla fanboy, and fair enough, I am. I'm gonna hold my hands up here. But we need to step back and look objectively at what they actually achieved, because the contrast with JLR's struggles is impossible to ignore. Now look, Tesla's approach to electrification was fundamentally different from day one. And this matters because it shows there was another way, a way that didn't require mass layoffs. Now look, first, there was the timing. Tesla committed to pure EV in 2008 with the Roadster, and they had 17 years to build the infrastructure, refine their processes, and establish really great supply chains. JLR only launched their Reimagine strategy back in 2021, and they're trying to play catch up in 4 years what Tesla did in 17. But here's what I want to know. Do you think Tesla's 17-year head start makes this comparison unfair to JLR? Let me know in the comments below. So then second, you've got manufacturing strategy. Tesla built dedicated EV factories from scratch, gigafactories designed specifically for electric vehicle production. And JLR is retrofitting existing ICE factories. Now the Halewood expansion sounds impressive with 750 new robots, but it's still adapting legacy infrastructure. And look, here's what matters. Tesla's Shanghai factory produces over 1 million vehicles annually, and JLR's Halewood aims for about 500 bodies per day. Now look, the efficiency gap is massive. Third, you've got supply chain control. Tesla vertically integrates about 80% of their components. You've got batteries, motors, software. They control their destiny. Now look, JLR depends on suppliers like Northvolt for batteries, and when Northvolt delayed, JLR's timeline, it pretty much suffered. But perhaps most importantly, Tesla avoided the legacy burden. You see, they didn't have to manage ICE production while transitioning to EV. They didn't have dealer networks resisting change. They didn't have decades of ICE infrastructure to maintain. Tesla sells direct to consumers, and JLR relies on dealers who frankly have been a little bit slow to embrace EVs. And that's not anti-EV bias, that's just strategic reality. And here's where Tesla deserves real credit. They had the courage to bypass the entire dealer system. That took massive conviction, and every traditional manufacturer said it couldn't be done, but Tesla proved them wrong and saved billions in the process. And look, I'm gonna say I do sound like a fanboy, of course I do, but you've got to give respect where respect is due. Now let's talk about where JLR went wrong. And this connects to something I covered in my previous Jaguar strategic analysis, which resonated with about 47,000 viewers because they recognize these strategic patterns. JLR's mistakes weren't just about EVs, they were about fundamental strategic positioning. You see, mistake number one, factory location. JLR exports heavily to the US, but they kept production in the UK. When US tariffs hit 25%, they had to pause shipments. And I will just say this, I've got nothing wrong with keeping factories here in the UK. In fact, I actually campaigned for it, but I think it's also a good idea to have factories on different continents, which means you kind of avoid any massive tariffs like the US has just imposed. You see, Tesla avoided this by building factories in target markets. Shanghai for China, Berlin for Europe, Austin for North America. So mistake number two, brand messaging. While Tesla positioned themselves as the future of transport, JLR got caught up in a cultural controversy, you could say. The Jaguar rebrand confused customers about what the company actually stood for. Listen, you can't sell cars to people who don't understand what the brand identity is. It's just clear. It's obvious. But mistake number three was transition strategy. JLR tried to manage ICE production while developing EVs. Tesla went all in on electric from the start. That focus made all of the difference. So look, here's the result. Tesla employed 140,000 people globally in 2023. They made some efficiency cuts in 2024, I'm gonna be honest, but that was just from a position of strength. JLR is cutting 500 from a position of weakness. But here's what really frustrates me. JLR should have set up overseas factories years ago. They've been exporting to the US for decades. And let's be honest with ourselves, the tariff risk was always there, right? This wasn't unforeseeable. It was a strategic, short-sighted view. This is the bit I hate. Now let's talk about the human impact, because this matters more than corporate strategies in my view. You see, 500 management jobs doesn't sound like much compared to JLR's 33,000 UK workforce, but each of these jobs represents someone's career, someone's expertise, and someone's contribution to British automotive heritage. These aren't just numbers on a spreadsheet, not to me anyway. These are people who believed in JLR's vision, who worked to make electrification happen, and who invested their careers in the company's future. And look, here's my concern. JLR's cutting management positions, but management is exactly what you need for successful transition, right? You need people who understand both the legacy business and the electric future, and you need institutional knowledge. Now, the broader automotive industry is bleeding jobs. GM just cut 2,000, Ford eliminated 4,000, Stellantis, they reduced by 8,000, and suppliers announced 54,000 cuts globally. And let's be honest here, this isn't just about JLR, it's about an industry struggling to make the transition, and obviously with the tariff cuts as well. But I'm concerned this is just the beginning. Other companies will follow JLR's lead, and management cuts are easier to justify than production costs, but they're often more damaging, I think, in the long run. So here's my question for you. Would you rather see JLR cut 500 management jobs or 500 production jobs? Because that might be the choice they're facing. What do you think? Tell me in the comments below. Well, look, the irony is, I think it's devastating. They're cutting the very people who should be managing the transition to electric. So what does this mean to UK buyers considering JLR vehicles? First, let's be clear, JLR's EVs aren't the problem. The Range Rover Electric is still coming, the Discovery Sport and the Evoque EVs are in development, and the EMA platform I think is solid technology. But organisational chaos affects production quality, and when you're cutting management, you're cutting oversight, quality control and strategic thinking that could impact the future of their products. And second, consider the broader picture here. JLR is financially stressed. They're net cash positive, but that £3.8 billion investment strained resources. Stressed companies make compromises on quality, on service, and also on innovation. And Tesla, meanwhile, has a £29 billion in cash reserve. They're not making cuts from weakness, they're optimizing for strength, like I said earlier. And that financial stability translates to much better products, much better service, and better long-term support. Now, third, think about the resale value. I think JLR's instability creates uncertainty, and uncertainty affects residual values. That matters if you're buying not just for brand loyalty, but for financial protection. And I'm not saying avoid JLR, I'm saying understand the risks. A company in transition is not the same as a company that's in complete control. And look, here's what I'd say is the uncomfortable truth. I think JLR struggles represent everything challenging about traditional automotive transition strategies at the moment. I also think traditional manufacturers are trying to maintain two businesses. They've got their ICE and they've also got the EV. And Tesla built one business, electric. The focus advantage, in my opinion, might be right, might be wrong, is massive. And traditional manufacturers are protecting dealer networks. Tesla built direct to sales, and the efficiency advantage, in my view, is pretty clear. You see, traditional manufacturers depend on suppliers, and Tesla vertically integrates. The control advantage is decisive. Now look, I'm going to be honest, here's what gives me massive hope. JLR's £3.8 billion investment wasn't wasted. I think that EMA platform is real, and the Halewood factory is upgraded, and the Range Rover Electric is coming. The question is whether JLR can execute without the 500 managers they've just cut, and that's going to be the real test. Look, JLR's job cuts are a symptom, they're not the disease. The disease is trying to transition electric while maintaining legacy operations. And again, this is why I think Tesla succeeded, because they went all in on electric from the start, and JLR is struggling because they're trying to serve two masters. Now, for weekly insights on how these industry changes affect UK buyers and why some companies thrive while others struggle, please join my Thursday catch-up newsletter. The link is in the description below. Now look guys, thank you so much for watching. I really hope you enjoyed this episode. I appreciate you watching this. My name's Des from the Electric Oracle, and I'll see you in the next video.